What if I told you it's possible to anticipate the low of the week for a bullish week, use a lower time frame for confirmation, and align ourselves with the expansion as price expands to form the high of the week before finally closing the bullish weekly candle. The same thing for a bearish candle. By the end of this video, you're going to know exactly how to take advantage of the expansion of the weekly candle using daily key levels, weekly profiles, time frame alignment, and of course, entries on the lower time frame. So make sure you watch this video till the end for you to get all the information. Before we proceed, I want to let you guys know of the 6 weeks ICT SMC Accelerator program that starts January 20th, 2026. So you're going to have 4 weeks of learning live classes. Every class is recorded just in case you miss a session. PDF notes will be provided. Then the last 2 weeks will be focused majorly on looking at the live market and applying what we have learned in the 4 weeks. Also, you're going to have backtesting session and weekly market review. So registration is ongoing. I'll put a link in the description box below and also I'll pin it on the comment section. The best trading strategy and the model that works for me is trading the weekly candle. And I want to trade the weekly expansion candle. There are people who only trade the daily expansion candle, and that is okay. If we have a bullish week, and that is why every week I always try as much as possible to identify the weekly bias. So the weekly bias, I need to identify how the week will play out. Are we likely to have a bullish weekly candle, or are we likely to have a bearish weekly candle? And for me to do that, of course, what I do every week, if you've been following me for some time, then you know every Sunday I do weekly Outlook videos where I try to identify the daily key levels that price can use to push price either higher for bullish week or lower for bearish week. So if you're going, let's look at this as a weekly. This is the weekly time frame. So if you have a weekly time frame, of course, a weekly time frame is a higher time frame. So if you're going to have a bullish week, so let's say price has retraced to a weekly fair value gap, right? And then we want to see a bullish expansion. As a weekly candle, all these can take even 2 weeks or 3 weeks, or it can even be a full week. So if you move to the lower time frame, in this case the daily, this is what you're going to see. You're going to see lower lows, lower highs, lower lows, lower highs, lower lows, lower high, until finally price tags what? This weekly key level. So once price tags this weekly key level, the next week, or of course you need to look for confirmations that what you expect next is bullish continuation if you're going to still continue with this bullish trend that you can see here on the weekly. Then you want to see price do higher high, higher low, higher high, higher lows, higher high, higher low. Of course, now for the weekly, this would take time. This can even be a 3 weeks, 4 weeks, 5 weeks, whatever. But what I'm more interested, or what I want you to see, is how price looks on the daily, which is the lower time frame, in relation to the higher time frame. So I want us to look at DXY. So if you look at DXY here, this is a bullish week. From September till date, it's been a bullish week. But you can see anytime we're having a retracement on the weekly, it's a whole bearish week. Then we made a higher high. We had a retracement to this weekly order block. So price tagged the weekly order block, then we made a higher high. So after making a higher high, you can see again we had a retracement to what? To this weekly fair value gap, and also almost tagged the order block. But the point is price tagged this weekly fair value gap, and you can see we had what? More bullish expansion. So now, in this case, when we're having a retracement on those weekly, this weekly retracement is what you will see on the daily as a bearish week. So let's just go look at it on the daily time frame. So you can see on the week we made a higher high. This was a retracement, higher high, weekly retracement to what? To the weekly order block. And you can see this is a Monday. Tuesday forms the high of the week. Then we have an expansion lower on Wednesday. Thursday on okay on Wednesday, Thursday, and this is Friday. So we finally tag the weekly order block. So after tagging the weekly order block, you can see now we start doing what? We get more bullish expansion, and this is a Monday, Tuesday, Wednesday, Thursday, Friday. But then we still continue with the bullish expansion. Okay, this is Wednesday, Thursday, Friday. Then another week we had Monday, Tuesday, Wednesday. This was a midweek reversal profile. You see the retracement? This is the retracement that you saw price retrace to this weekly fair value gap. You can see the retracement took almost 2 weeks. The previous week we had that retracement on Thursday and Friday. Then the next week, more bearish. That is Monday, Tuesday, Wednesday, Thursday, Friday. So price finally tagged this weekly key level, but you can see we did not violate it. Then now this week that just ended, you can see now we had now bullish expansion from this weekly fair value gap. And you can see this is Monday, Tuesday, Wednesday, Thursday, and Friday. Finally, we closed the week. So this is literally how price plays out. And this is the reason as to why most of the time you want to start your analysis from the weekly time frame. Because anytime you're having a retracement on the weekly time frame, if you move to the lower time frame, it looks like we are changing bias and expecting more bearish moves. If you move to even a lower time frame, let's look at the 4 hour time frame. So if you look at the lower time frame, you can see this is a whole bearish move. Lower low, lower high, lower low, lower high. So if you don't understand higher time frame PD arrays and you don't understand how market structure behaves, and if you don't understand market structure in relation to the different time frames that you have, you would really get confused with such kind of price action. For those of us who look at the higher time frame, we are aware, we understand that there's a weekly fair value gap here. And we know if price respects this weekly fair value gap, then we are likely to see what? Bullish expansion. So now you need to understand time frame alignment. So time frame alignment is higher time frames and lower time frames. So as a smart money trader or as an ICT trader, we are trading with institutions. And most of the time we say institutions, they buy at discount and they sell at premium. So we also want to do the same thing. So if you have a market that is bullish, we're making higher high, a retracement, higher high, retracement, higher high. So this retracement, we retrace to internal range liquidities. It could be a fair value gap, it could be an order block. Then of course, to go make a higher high, external range liquidity is our target. So if you have a situation where you're bullish on the week, you need to identify, and this is the daily time frame, you need to identify a daily internal range liquidity. And most of the time you'll see when I'm doing the weekly outlook, you'll see me get my fib tool and mark the range. From the range high to the range low, you want to identify, because in the daily time frame we just made a higher high. So anytime we make a higher high or a lower low, you should anticipate a retracement. And most of the time, price will be retracing to, if it's a bullish week or if it's a bullish expecting bullish moves, there's a high probability that the market will retrace to a discount period. So let's say we have a daily fair value gap here. You want to see during the week, price retrace. It can even take 2 days. You can have a situation where Monday is bearish, then Tuesday we tag our daily PTRE. Then now we expect expansion on Wednesday, Thursday, and sometimes Friday, and we finally close the week after making the higher high. So you will realize that just go and backtest this. Once price has retraced to our daily PD array or our daily discount array, the rest of the week expect expansion away from this daily PD array. Expect more expansion, higher, higher until we close the week. So of course, depending on the weekly profile that plays out. There's some weeks where Friday you'll still get an expansion, and there's some weeks where Friday will not give you an expansion. Instead, you'll just get a TGIF. Of course, depending if you had a classic expansion profile. So now, this is how you're supposed to take advantage of this move. Again, we'll go back to looking at the market. So if you have this market low, as you're having a day's retracement on Monday, let's say we take Monday, and even Tuesday. Finally, we tag this. This retracement, if you move to the lower time frame, of course, it's a whole bearish structure. And this is how intraday traders are able to take advantage of this move. On Monday, you'll see intraday traders counter trending the overall range. They're taking advantage of this. So this can be a Monday or even Tuesday bearish trade. Finally, we tag our daily key level. So once price tags our daily key level, we move to the lower time frame. So the lower time frame of the daily is 1 hour. So 1 hour is the lower time frame aligned for the daily time frame. So this is the time frame alignment right here. What we got to do on the 1 hour, we need to get a confirmation that the market has tagged this daily fair value gap, and now this daily fair value gap is acting as support for price. And of course, once price tags the daily key level, you need to wait for the candle that tagged it to close. So if we tagged it on Tuesday, then we're not moving to the lower time frame on Tuesday. We are moving to the lower time frame the next day, which is in this case on Wednesday. So on Wednesday, we are looking for what? We are looking for smart money reversal. This is now where you're going to apply your smart money reversal patterns. What the mistake that most people do, they just go to their charts and randomly they're looking for reversal. And that is how you'll end up losing a lot of money. You don't do that. Even applying the ICT 2022 model, you just don't go to your chart and randomly apply that. We have specific places that we do that depending on our bias and narrative. That is why you need to have the bigger picture. That is what you need to do to know how to analyze the market. You just don't run for entries without even doing the overall market analysis. So in this case, on Wednesday, you now come to your chart and you're looking for liquidity sweep. This is now the time where you're going to look for SMT. SMT, you just don't randomly go to the charts and look for SMT anywhere. So you're looking for SMT, change in state of delivery, and market structure shift. All these are smart money reversals patterns, or even it's still part of ICT 2022 model. Okay, so of course SMT you'd find if it's maybe this was USDCHF, maybe you find USDCHF we made a lower low and DXY we did not make a lower low. So that already is SMT. Then come to your charts again. Maybe Tuesday, by the time we're closing the day on Tuesday, this is what we have. We had already had market structure shift, or that market structure shift, you can wait for it. If Wednesday opens and we do not have a market structure shift, of course, you're going to mark this and you wait for price to give you that. Okay. So this is what you do. You wait for price. Now, finally, you get market structure shift. So all this we're doing what on the 1 hour, because 1 hour is the lower time frame of the daily time frame. So once you get all that, you have market structure shift, you have liquidity sweep, you have SMT, you have change in state of delivery. That is good enough confirmation that this market is ready to give us bullish expansion after doing what? After tagging our daily key level. So in this case, once you get a market structure shift, you can use any PDRA, identify any PDRA on the 1 hour. It could be a fair value gap, it could be an order block, it could even be changing state of delivery, okay? You identify either, then you want to use that for entry. If you're going to use the 1 hour for entry, this is now the best time. You can use that for entry. And of course, if you're right about the weekly bias, if the bias is bullish and the market is going to give us a bullish move, this is how you can be able to participate and be part of the weekly trend. So but at this time, this is what the weekly candle would look like. So maybe we open the week on Monday, Tuesday, we go from the low, tag our daily key level. Then now on Wednesday, we start seeing this. So if you get an entry when the weekly candle is still here, or even when we have just flipped a little bit, we're above the open. So in this case, it will be a bullish candle. Anytime you're above the open, you can be able to take advantage of this whole weekly range expansion. And most of the time, the best targets would be previous week highs. The previous week high, that is the best target. That should be your first target, then more previous week highs. So that's how you can take advantage of this move. If this was Tuesday, Wednesday, you expect more expansion higher. Thursday, also you expect expansion higher. Friday, sometimes you'll get the expansion, or sometimes you'll just get a retracement to close the week. Okay. So then finally we form the high of the week on either Thursday or Friday. Then we get that last protraction and close the week. So when I say I'm trading the weekly expansion, this is the range I'm trading. This is the move I'm trading. This is how I'm able to get 1:3, 1:4, even sometimes 1:5 trade setups. And if you're good at this, you don't even need to take a lot of trades. One trade in a week is good enough because you will have gotten enough moves. Ending the week with 1:3 setup, with a 1:3, 1:4, that is still good. Even if you get two trades, 1:2, 1:2, that is okay. So that is first of all the first way of taking advantage of this. So then you get Wednesday. Most of the time you'll find after price tags our daily key level and we get that expansion the next day, most of the time you normally find the move at times it is so fast that you might even miss a setup. So you end up having, this is the 1 hour there. This is where now it's good to understand the weekly profile. If you understand the weekly profile, you will know very well at this point if Wednesday tags your daily, Tuesday tagged your daily key level, and Wednesday we got the first expansion higher. At this point, you know that you are likely to have, there's a high probability that you're going to have a classic buy week. So if you're going to have a classic expansion week, you know if Tuesday forms the low of the week, then expect expansion on Wednesday and Thursday. Friday, it depends. Friday, there's some Fridays you'll get expansion, there's some Fridays you'll get TGIF. But at least you know very well you have a trade on Wednesday and you have an opportunity on Thursday. If you miss the Wednesday opportunity, you still have an opportunity on Thursday. So now, come Thursday, after price has, we've gotten the first reaction from the daily key level and we've got the first expansion. From Thursday, henceforth, or from Wednesday, depending with the day, as long as this is the important thing, we tag our daily key level and get the expansion. After that, going forward, you will now use the 4-hour time frame to look for continuation for the rest of the week until finally we form the high of the week and close the week. So going forward, we now use the 4 hour. We expect, and you can go back test this, that in the course of the week, price will only be retracing to 4-hour key levels. 4-hour key levels at this point, they now act as high probability for the continuation move for the rest of the week, for the weekly candle to finally form the high of the week, then we close the week. So in this case, if you look at the 4-hour on Thursday, you will see that there's a 4-hour key level price will tag and you'll get your move. Friday, if you're going to get more continuation moves on Friday, the same thing. You want to look at the 4-hour. Of course, there's some weeks where Monday will form the low of the week. Monday tags our key level. So in such a case, you have more days. Then Tuesday, you get confirmation and the first expansion. So in that case, now you have Wednesday using the 4-hour, Thursday 4-hour, and Friday if you're going to get expansion, because Friday there's also a probability of getting a TGIF, which is the last protraction as we close the weekly candle. But in this case, just look at the 4-hour for continuation. So if you're looking at the 4-hour for continuation, of course, that would mean your entries would be 15 minutes. So according to my broker, these are the 4 hours that we have. We have the 21, that is the 4-hour candle opens at 21, another one at 1, another 4-hour at 5, another 4-hour at 1, and another one at 13:00. Okay, 1 p.m. So if we have the 4-hour during the night, of course. So maybe the 21:00 tags the 4-hour key level. Because remember, we have to wait for the candle that tags our key level, our PDRAs, our point of interest, or internal range liquidity to close. If you're looking at the 4 hours, it means we have to wait for the 4-hour candle that tags it to close, okay? So if you have the 21:00 4-hour tagging our internal range liquidity, our 4-hour fair value gap, then that means the next 4-hour candle that opens at 1, we're going to have a trade. And this would be during London session. because London kill zone starts at 2 a.m. And so it means from that one, and the 4 hour candle opens at 1. So which means from 2 a.m., we are likely to have a trade setup. So you move to the lower time frame, which is 15 minutes, and you look for your entries. Now, at times you'll have a situation where you mark your 4 hour key level or PD array, then the 1 a.m. 4 hour candle is the one that tags it. So in that case, that means you don't have a trade during London session if you're going to use the 4 hour as your higher time frame. So it means your trade setup will come from what time? The next 4 hour candle, which is what? It opens at 5 a.m. So the one that opens at 5 a.m., we have 5 to 6, 6 to 7, then 7 to 8. 7 a.m. is when New York, and all this is New York time. So 7 a.m. is when you're going to have New York session or New York kill zone starts at that time. So which means you have a setup during New York from 7 to 8 and 8 to 9. Then you'll have a situation again where you might identify your 4 hour key level, and the 4 hour key level is tagged by the 5 a.m. 4 hour candle. So if the 5 a.m. 4 hour candle tags that key level, then it means the next time you're looking for a setup or the next time you're looking for entries on the lower time frame is using the what? Is the 9 a.m. 4 hour candle. So which means you're going to have most of your trade will play out during London close, which starts at 10 a.m. But that is still starts at London during New York session because New York still 9 is still New York session. So from 9, that is when you'll move to the lower time frame, 15 minutes to look for your entries. So I hope that makes sense. So that is how I'm able to uh, use the 4 hours as a higher time frame and look for entries on the lower time frame. So what happens if you have a situation where price tags your 4 hour key level and you just get a move and you don't get an entry? So price tags the 4 hour and we're just getting moves higher, 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 and you don't get an entry. So the 4 hour candle ends up closing. Maybe we tag with the 2100. Then at 1, when you're trying to look for your entries, already the candle has moved and it's really bullish. You've already made a higher high. Or we're still going to make a higher high. In this case, let's say we have not yet made a higher high on the 4 hour. Because most of the time, if we make a higher high on the 4 hour, you anticipate a retracement on the 4 hour time frame. But in this case, we've not made a high high on the 4 hour. It's just we target and we just bullish. And I'm sure you've seen such situation. We'll look at examples. In such a case, if you want to take advantage of these more bullish move or continuations, you can move to the 1 hour. You'll find there's a high probability there's a 1 hour fair value gap or 1 hour order block that price is going to retrace to, tag, and then you continue with the bullish move. So this is how you can take advantage of continuation moves if you miss your entry on the 4 hour. So I want us to look at examples for each that we've talked about here. So let's go to the charts and see how this would look like. So we're going to use a replay for that. So first thing we talked about, we said, of course, you need to identify your bias. If you have your bias right, you want when price tags the daily key level, you expect expansion the rest of the week away from that daily key level. Okay. So in this case, this is Friday. This is a week that was bearish. Price was retracing to the weekly DXY. So in this case, this is Friday. So the next week, of course, already you have an inversion. It's not yet inverted yet. It's not yet inverted yet. That's okay. So then Monday comes in. So Monday has already inverted it. So we have inverted this, and this is now an inversion fair value gap. Because you can see we close below it. This is where we close that candle. So this is already inverted. Then Tuesday comes in. You see, Tuesday, what happens? Tuesday, we tag this inversion fair value gap and do what? And close Tuesday bearish. So now at this point, we expect to see Wednesday lower expansion and Thursday to give us more lower expansion. Then Friday, it depends. Friday, you can get more expansion or you can get TGIF. Okay. So this is Tuesday. Let's see Wednesday. Wednesday, we had an expansion. Thursday, that is good. We still have an expansion. Then Friday, you can see Friday we have one last expansion, but we still close the day like that. So this is more of like a TGF. So this was Monday. We inverted that fair value gap. Tuesday, we tagged it on Tuesday, and then we got all this expansion on Tuesday. So by the time you come to your charts on Wednesday, already Tuesday has given us, we have already liquidity sweep, we have market structure shift, we even got the expansion lower. So in this case, already price has expanded away. We've already got the expansion away from our daily PDRA. So in this case, it means on Wednesday, we're just looking for continuation. And remember we said whenever you're looking for continuation of the weekly range, we are looking for continuation for more bearish moves. The best time frame to do that is the 4 hour. So in this case, we'll need now to move to the 4 hour time frame. So if you move to the 4 hour, already you see we have this 4 hour fair value gap, which was already tagged by 1700 candle and 2100 candle. So which means during London session, already you're moving to the lower time frame to look for your entries. So in this case, you move to the 15 minutes. You already have liquidity sweep, you have market structure shift, we have even made a lower low, we had a retracement, made another lower low, we still had more retracement here. So you had so many opportunities, you would have gotten so many opportunities to take advantage of this trade. Now at this point, this is where now you're trading your expansion, trading the expansion of the weekly range. So if you look at the 4 hour, we have this sell side liquidity, we also have this sell side liquidity. All these lows are good potential to target. Also this low here. You don't need to catch the whole weekly expansion. So if you did not take advantage of Wednesday trade, or you want to get an entry on Thursday, again, you on the 4 hour, we're just using the 4 hour still. Thursday, we expect more bearish expansion. So in this case, you can see on the 4 hour, we have this 4 hour order block, and we also have this 4 hour fair value gap. So we have that marked out. So already price has tagged this 2100, which means during London session, already on the lower time frame. So you can see we expect price to tag this, then you get bearish move, and there we go. Finally, we got that on Thursday, and more bearish moves, and there we go. Thursday, Friday. So we've already made a lower low. Already we have another fair value gap here. So if you're going to get more expansion on Friday, you should expect that to be used by price to push price lower. So you can see we targeted it on Thursday 1700 and 2100. So which means if you're going to get more expansion, London session is your trade for the expansion. And yeah, so we just had that expansion and we finally closed the week. So let's look at Euro USD. Again, we'll start with the daily. Remember, Euro USD and DXY, they're negatively correlated. So in this case, DXY was a bullish week. So of course, Euro USD is a bearish week. So this here is important. Then we get that. On Monday, you can see Monday we invert this. So that means if DXY is going to give us a bullish week, then this is a good key level to use for a bearish Euro USD. So this is an inversion fair value gap. Tuesday, we target and we close bearish. So of course, then now that means Wednesday, we expect more expansion lower on Wednesday, Thursday, and Friday. Some weeks we will get that on Friday, some weeks it will just be TGIF. So let's move to the lower time frame, which is a 1 hour. On Tuesday, you can see we tagged our inversion fair value gap, got liquidity sweep. So this is the last higher high that sweeps liquidity, and then we break lower. So right here, we already have market structure shift here. Then this is a fair value gap, which price tags. So if we are bearish, we want to see price use this fair value gap to push price lower. London session is here. So you can use this for entry, which is what I used for my entry. Take profit one and final target was there. And there we go.